Hello guys, welcome to Economy Hut. Again today I have come with another topic of economics, that is qualified institutional placement, which will be going to an really an important and exciting topic, and hopefully it will help you guys. So let's start with the topic. First of all, we will start with the introduction part. So let's see the introduction in details. Guys, like any computers or institutions is formed with the motive of a long term stability through growth and profits. Now all the companies who are listed on the Indian Stock Exchange, such as BSE, NSE, need some fresh funds during their course of growth in different forms, like through equities or derivatives. Sometimes QIPs are issued also to reduce promoters holding the company. Now, equity actually means raising money through share allotments in the IPO, when a company is first listed on the stock market, or the FPO. And now FPO stands for follow on public offer, actually, which means when the company need more money for expansion. Now this way any company or organization can raise money listed on Indian stock market. Now, but the company have some limitations for issuing these fresh shares in the market, and this limits the company's options to raise money from the market. Now the solution of this issue is the QIP, and the companies can easily raise funds through this method. So let's see the next part. So this is all about this part in introductions. So let's see the next part. So in the next part we are having QIP. Now we'll see here what is QIP. Now QIP stands for Qualified Institutional Placement. Now we will understand it by breaking each word and understand it exactly. So let's start with it. First of all, Q in the QIP. Now Q stands for Qualified Institutions. Now qualified institutions are those which are well qualified, as they carry a huge amount of analytical skills to understand the intrinsic value of a company. Now, well qualified, having huge experience in the stock market for the last 10 years, is what it means to be qualified institutions. So this is about the Q in the QIP. Next, let's come to the I in the QIP. So we'll see this part now. Now this I indicates that the significant sum of that a significant sum is invested through this techniques, and that is unusually for an individual to investment in is conducted through large organizations. So now this is about I in QIP. So let's see the P in QIP. Now P stands for placement, which means the bulk of transaction happen, and actually they get placed in the initial scrutiny of the SEBI. Actually, it is because is is called that is why it is called as the placement of the transactions. So this is about the P in the QIP. Now we can summarize this QIP is a method of raising funds by that are already mentioned on the Indian Stock Exchange with the funds upcoming from significant institutions or investors. So this is all about the QIP. Now let's see the next part. The next part is about what is QIB. Now QIB is something that is the large organization which desires to invest in a firm through equity, that means shares, that is referred to as QIPs, and that stands for qualified institutional buyers. Now we can take as an example that SBI was recently a QIB for the purchase of some equity stakes in Yes Bank. Now Yes Bank money from this QIP transaction to enhance their balance sheet. Now this is all about the QIP. So let's see the next part. Now another thing is really an important thing. Why was QIB introduced? The reason of introductions of QIP. Now let's see in details. Now before 2006, for any company to raise money in a domestic market, there was the need for so much paperwork and slow mode of results from the paperwork. Now there was the less fund transfer in actually. So that's the reason less fund transaction in actual from this paper works for all the institutions who are in real need of funds for their growth plans. Now guys, now companies use to raise cash from big foreign institutions in the form of ADRs, GDRs and FCCBs. Now in 2006 the SEBI created QIP or quantitative investment placements, via which any firm registered on the Indian Stock Exchange can collect rapidly from a specific client in the quickest and the most efficient manner possible. Now only with the least amount of documentation and paperwork. Now this is all about the reasons of introductions of QIP. Now let's see the next part. In the next part we have a questions that are whom and where shares for QIP are allotted. So there was two questions, whom and where. So let's see the answer. Now guys, most of the listed firms and organizational structures of share divisions, that means which means that it implies some are held by promoters and some are by investors and also the remainder are held by individual investors in the open market. Now, when this firm has to obtain funds, shares from the founders' holdings and are sold to investors who are interested. Now, this promoter's interest is reduced by a percentage, but the firm is able to enormous quantities of funds for its expansion goods. So this is from where this from this we will get the answer of whom and where. So it's all about this part. Now let's see the next part. Now again another important question: how is the QIP issued? Now we will see the how. Now there are different ways to issue QIP, but the two major ones are as follows. Let's see. First of all, QIP to 250 crore. Now in this placement, up to 2 investors can only invest as per rules of the SEBI. Now let's see the next one. QIP crores and above. So let's see this part. That the promoters are not permitted to invest in the QIP investors. In addition, regardless of the amount of the QIP plan, 10% investment must be in the spirit of common funds or directly from the assets of stack of investments. So this is why QIP, how QIP has issued. Now we will see a example of this. Now if a QIP is worth 100 crores and two interested investors want to invest in it. Now this 20 crores of the total amount must be invested by them from any mutual funds, organizations, which could be their own or another company in which they have already invested. So the MF companies must invest this 20 crores on their behalf. So I think it will be clear, it will be more clear with these examples. So let's see the next part. Now in this part we will see, is there any discount given to the QIP investors? So what did you think, guys? Okay, I am going to give you the answer. Yes, absolutely yes. We gave the investor invitations a tiny bit of money after analyzing the average last week's trading prices. Now guys, this prices is a win-win scenario for both the firm and the investors. Now, though the shares are created in bulk and the special discount in an immediate effect in the share value on the next day stock market. So I think you have enjoyed this answer, guys. So let's see the next part, and this is all about this part. So let's see the next part. Now guys, what are the examples of QIP fundraising? Now we will see the example of the QIP fundraising. Now there are many regular examples of fundraising through QIP, but some of them are as follows. Now Shriram Transport launched its rupees 2000 crore QIP on June 7, 2021. Now the banking institutions Bank of Maharashtra will raise up to 2000 crore through the QIP route before July end 2018. Now the next one, telecom company 6 plans to raise 7,000 crore through QIP in the year 2021. Now this banking institutions Bank of Baroda raises rupees 4,500 crore through QIP in March 2021. These are the examples of QIP fundraising. So let's see the next part. So we have come to an end of this topic, guys. Now guys, if you have any question related to economics and finances, feel really free to ask us through comments, and we are really happy to discuss on the topics you mentioned by our viewers. So please feel free to ask any doubts about economy to us through comments, and thank you for listening, guys. Thank you so much. Wait for the next video. Till that, stay tuned.